Alright, in today's video, let's take a look at 10 AI related stocks that have the most interesting chart setups right now, map out potential buy zones for these stocks, and then look at some price targets as well. So the first one I've got up on screen here is ALAB, and this is one of the most bullish AI related stocks on the monthly level. So on a high time frame, ALAB looks incredible right now. We can see that it's just making higher highs and higher lows, and we've made a high up here at around 500 and we're pulling back now. You've got to expect volatility in these AI related stocks. Like, we're down 40% on the monthly right now, so if you're FOMOing in and if you're buying the highs, then you can end up taking a pretty big drawdown on these stocks. But if you're mapping out key levels, buying these kind of stocks on pullbacks, then the potential returns that you can get on them are pretty insane right now. So the reason I like ALAB so much is because of its structure on the monthly, and then we also have a really nice gap down to about 214.52 here. This is the level I'm going to be watching for ALAB to come down to, and if it does get there, then I want to look for some bullish market structure on the lower time frames to get into a trade. So what we can see happened previously on ALAB when it pulled back is there was a gap from about 124 here down to 102.54, and you notice that where I've got this horizontal line, we bottomed like exactly at the bottom of this gap here. So at the gap came down 102.54, and that was the exact low. So if we did something similar here, filled in this gap all the way down to 214.52, this 214 level is going to be really key, and that could be a potential bottom on ALAB. If we look at how much it's pulled back in its previous corrections, we can see that in its first correction here, it pulled back around 68%. In its next correction, it pulled back about 62%. So it's getting a little bit shallower each time. If it got even more shallow this time, like a 57% pullback, that would line up perfectly with this level I have here at 214.52. So we're on the monthly level right now, but if we pop down to the weekly here, if you see something similar to this, if ALAB gets down here to the 214 level and you see something to where we make a low right here and then we run the low, let me just zoom in here so it's a little bit easier to see. But this was just such textbook bullish market structure on ALAB here. We came into a monthly level, we had a low right here, we ran the low on the weekly, and then we closed back above. So you could have taken this trade on ALAB here because it was into a key monthly level, and then we got a nice weekly close with a sweep of this low, and you could have just bought ALAB on the weekly close there, and it would have provided you with an insanely good risk reward. So if you bought the close, your stop would have been like 16% there, and then you could have rode this thing up. Like if you rode it up to where we got the bearish weekly hammer here, then it would have been like a 250% return. It would have been a 15R trade. So insanely good risk to reward on this trade here. And then for potential price targets on ALAB, you would be targeting the all-time high again here. So from 214 back up to like 495, so like 130% gain there. And if we take a look at what it did from breaking its previous high here, so breaking its previous high, it ended up going up around like 80%. When it broke like this high, it went up, you know, about 80%. So if it did something similar to the upside again, then an 80% move from this high would put you at around like 900 on ALAB. So a move from 214 up to 900 would be a really nice 4x move there on ALAB. So definitely has a lot of potential here if it does end up finding a nice bottom at around 214. All right, so the next stock here that has a pretty interesting setup brewing is Coreweave, or CRWV. So this one's been going sideways for the better part of almost a year now. So June 25th or June 16th of 2025 was its previous top, and now we're into July here. So this thing's just been chopping around for about a year now, a little bit over a year, And the setup that I'm going to be watching for on CRWV is if we can run this low here at 67.27 and ideally take out this low even further down at 63.87 here, run both of those lows and then get a weekly close back above 67.27, that would provide a pretty nice swing trade up to about at least the 116 level on Coreweave. So it would just be a range play here. So if we take a look at our risk to reward calculator, if we got to close back above, and then let's say like we wick down here to like, if it dumps in the next week or two, we wick down to like 58 or something, and then we get a close back above the 67.27 level. Let's just say we close at like 69 or something. Then you'd be looking to swing this, and it would provide a nice 4-hour trade setup here with a range play back to the highs. And you can see how it reacts if it gets back to the highs here. If we just get like a straight up bullish candle that closes above like 138, then you can just stay in the trade. But if you notice it like chopping up here, putting in some bearish candles, some wicks and some hammers up here, then you could just look to get out of the trade and be a nice 4-hour setup there. So Coreweave does provide one of the better opportunities here if we do see that setup emerge in the next couple of weeks. So the next stock I'm looking at here is VRT, or Vertiv Holdings. So this one is probably one of the stronger AI related stocks on the high time frame. It has still yet to break any sort of significant market structure, whereas a lot of these other stocks that are related to AI, they have broken market structure on the weekly level, but VRT has actually not even broken market structure on a weekly time frame. In order to break market structure on the weekly, we need to see it close below this 275.38. But you can see here that over the past week, what we did is we ran out the low and then we got to close back above. So even right now, this is a pretty interesting trade setup here on VRT. If you think the market is bottomed right now, and we're going to go up from here, then this provides a pretty good risk to reward setup just like right now. Based off of this weekly close here. So you'd put your stop below the low there, and then you'd be targeting new highs. So this would be like a 5.8, like 6-hour trade here on VRT. Now, if we do end up getting a weekly close back below this like 275.77 level right here, then I'd be looking for a deeper pullback, because as we can see here on the monthly chart, we have a pretty nice gap down here on VRT. So we've got a gap in between 231.34 right here, and then down to about 200 to 200.75. So if we were to lose this weekly level here, then this would be the next potential buy zone down 231 to 200. But I do like this chart for the long term. It's been basically holding its trend for the past, like 4 years now. So on the monthly level, technically, as long as we're above 148, then this thing is still bullish. That was the last week, or that was the last monthly swing low before we broke higher. So if we're above 148, this thing still looks great. It could pull back all the way down here to like 200, 231, and that would just be good opportunity for the long term on VRT. The only time that I would get more worried is if we did end up starting to close like weeklies below the 148 level, because then we're like breaking market structure on a monthly time frame and things wouldn't look as good. We do have a bit of like a trend line setup here that you can play as well potentially. So there's a bit of a trend line on the monthly there. So ideally, we hold this trend on VRT. Like if we just chop around a little bit right here, just don't close below 276, chop around, and then it has its next leg up, then that would be a pretty nice setup on VRT. So you can either play it a couple ways here. You can literally buy like right now with a stop below like 273.92, or if you want to be a little bit more greedy, then the buy level on the monthly down here like 230, in between 231 and 200.75. If you do think the market is going to pull back even further, then that would be the next buy zone on VRT. And just looking at what VRT did in the past as well, this makes me even a little bit more confident that we could be finding a low here at around this 283 level, because if we look what we did when we broke out before, so we broke out here on this monthly candle, and then where did we pull back into? Let me just draw a line here. So we pulled right back into the fair value gap on the monthly, and then we formed a wick low here. We ran the low on the next monthly. Let me just zoom in here so it's a little bit easier to see. So we had the breakout candle right here. Okay, the next month we came down, we tested this gap here. We wicked up. Next month we came down, we took out the low. Okay, closed back above, and then we ended up going up again. And that could be like very similar to what's happening right now, to where, okay, we had the breakout candle right here. Okay, we pulled back, wick down on the monthly, and we got a nice close back above. And on the following month, we also ran this low. And if this next month here, this is going to be a pretty key monthly close here on VRT. Okay, so pay attention to this monthly close, because if we can close above this level right here, 275.2, then that would give me a lot more confidence that we're probably going to see another leg up here on VRT, or it at least provides you with a really nice invalidation. Okay, because the invalidation would be just like a weekly close back below 273 there. If you got an entry at, like, let's just say you have to buy like 296 on the monthly close or something like that, and your stop is below there, you're only risking like 7%, you know, and then you'd be targeting the previous all-time high. So that alone would be like a 4-hour trade. And then you would obviously look for it to continue higher from there as well. If we see how high it went from previously breaking out of this high here, it ended up doing like about an 85% move. So if it were to do an 85% move again, not saying that's going to happen, but just to compare, an 85% move would take you up to around 700. So if that were to occur, then this trade here is looking like about an 18-hour trade, which is pretty insane. So definitely a stock that I'm paying attention to right now, as it does have one of the best market structures on the monthly, and it does have one of the best risk to reward setups that is showing up right now. So the next chart I want to take a look at here is Nebius, or NBIS, and this one has some pretty bullish market structure on the monthly level here. We can see that for about 2 years now, it's been making higher highs, higher lows, higher high, higher low. We just made another high here at around 300, and we're pulling back now. And I really like how we're pulling back here and the level that we're bouncing at so far. So I have this level marked out here at 168.8, and that is the gap on the monthly. So there's a gap here on the monthly from like 200 down to like 168, and on this monthly candle, on this July candle, we filled in this gap perfectly, and we've bounced from it so far. Now the reason to why I just really like this setup here is because we're kind of forming something very similar to what we did last year on Nebius, to where in December, what did we do? We came back down and we filled this monthly gap. So we had a big breakout candle here, right? In September, we had another high here, and then we ended up pulling back into the gap here at like 76.39. We're kind of doing something similar here, to where we have a big breakout candle, another up candle. We're pulling back now into the gap here at 168.8. So what you would like to see for a really nice setup on Nebius is that if we just chop sideways here for the next month or two, and then in either the next month or, you know, in August or September, we come back down and we run this low at 160, I think it's 164.31 to be exact. If we run out that low, and then we get a monthly, or you could even be more aggressive with like a weekly close back above 164.31, that could provide you with a really nice swing setup. So if we go down onto the weekly chart here, if we're to run out this low at 164, get a close back above, let's just bring out our tool here and see what we could be looking like for a potential setup. So let's just say we end up closing back at like 178 here. And if we dip down to around 155, then you would enter here, and you would have about a 13% stop, and then you'd be targeting the highs here. So that would be a 5-hour trade just by targeting the highs. But if we take a look at, like, if we were to break the highs and break higher from this previous breakout here, we ended up going like 112%. So if we're even a bit more conservative here, and let's just say we go like 70% if we break the high, then that would bring you up to around like 500. So if we just extend this up to 500 here, then that would be a 14R trade. All right, so this zone here between 168.8 and then 141.46. So 141.46 is the previous all-time high here. That's what I'm going to be watching for on Nebius. I do really like pulling back into this zone as well, because if we look at its previous pullback here, we pulled back like about 48%, and if we did something similar on this pullback, then 48% would take us down to about 155 here. Okay, so that would coincide with running out the low here on the monthly, running out this low at 164.35 around there. You would get that dip down below, about a 48% drawdown, get a weekly close back above the 164.31, and then you've got your trade setup on Nebius. All right, so next up we have Bloom Energy, or BE, and this one is coming into a key level on the monthly chart like almost right now. So we can see here that on the monthly level it's still bullish as long as we're above, let me map out this low here on the monthly, as long as we're above like 116.86, then this chart is bullish. So what you'd want to see here on Bloom is it come down in between 169.13 and 116.86, and then just kind of chop sideways a little bit here. Okay, and this could be your accumulation zone on Bloom Energy. If you were to see a weekly close below 116.86 though, then that's where I would get a little bit more concerned, because that would be, you'd be breaking structure on the monthly, and then that just wouldn't look so good for the long term. But right now there's nothing wrong with this chart on the long term, on the high time frames. So a pullback, you've got the fair value gap here on the monthly. Like, it's a very similar setup on a lot of these AI charts that we've looked at so far, to where they have these gaps on the monthly. They're filling them in right now. So if we fill in this gap on the monthly here down to 169.13, you see like a low form here at 169. Like if we wicked into here, got to close back above, chop sideways, ran the low again, close back above. It's just, there's these potential setups on a lot of these stocks right now. So Bloom Energy, another one I'm watching here if it does come into this level. So there is actually a setup here just based on the monthly, to where you could simply enter at this 169 level here, and your stop could go below this low here. Okay, and then you'd target a move back to the previous high. So this in and of itself is a 3.5R trade. So it's actually a pretty nice setup here on the monthly. We can see that the previous time that we did this on Bloom, to where we broke above the high. So we broke structure here on this monthly candle. Let's just bring this line down here. We got this break above here. Okay, we ended up coming back down, filling in the gap here. And if you were to enter on this gap here at like 120.41, and you put your stop below, let's just bring out our tool again here. So if you were to take this previous setup on Bloom, then to the high, you would have had like a 5R trade there. You would have had an 189% move. It is a 36% stop, so you do have to size accordingly, and you do have to use proper risk management for a trade like this if you are taking it on the higher time frame. But the similar setup here is potentially looking to form, to where we come back in, we fill the gap here, 168.76. You put your stop below there. So let's just see, what was the percent move down here? So it would be like a 30% stop, and then you would end up targeting back to the high, and ideally, you'd want to see this thing break out to new highs. So potential 5R trade, 170% move. Like if we just take a look at how much it moved when it broke out last time. So last time it broke out, it ended up running 95%. So it's probably not going to run as much on the next breakout, because you wouldn't expect it to have, the same kind of move, being a higher market cap now. But if it were to move like 70%, something like that, take it up to 600, then you could be looking at a 250% 8R trade on Bloom Energy. So next up here, let's take a look at MU, or Micron, and this one I don't have as good of a read on as some of the other stocks that we've covered in this video. You can see here that the monthly level on Micron is all the way down at 472, so that would be a massive pullback, and I'm not saying that we're going to get there on Micron, but it definitely does have potential for like a lot of downside. It's like a 62% move down to there. But if we just go on the weekly chart though here, you can see that we ended up putting in the structure to where we had a high right here. Okay, we had another high here, another high here. So we had this like 3 drive setup on Micron, which is generally a pretty bearish setup, where we just end up, let me draw a trend line here. So we've got our high right here, we make another high here, and then on these kind of 3 drive setups, when you see a close back below this second high here, if we get a close back below, it's generally going to be the signal that it's going to pull back further. So we got a close back below on this weekly chart here, and we've ended up pulling back a little bit further. So on these kind of 3 drive setups, the most ideal entry that you'd be looking for is for the chart to pull back all the way down to where the move originated, so back down to like 650 on Micron. Now that is a pretty big pullback from where we're at right now. That would be a, let's see here, still like a 28% drawdown from where we're at right now. So it's a pretty big move, but until we see some sort of shift in market structure on Micron, then I'm definitely not super interested in it right now. Like, we're kind of just in the middle of nowhere at this point. The first signs of bullishness on Micron is if we could get a close back above 1,038, because that would signal a shift in market structure on the daily. But what I would like to see here on Micron is some sort of a 3 drive setup to the low. Okay, so you can see that here previously we had a 3 drive setup where we made a low right here. Let me just zoom in a little bit so you guys can see this. See it a little bit better. So we made a low right here. Okay, we ran the low again here, and then we ran it for a 3rd time. So these kind of 3 drive setups are generally pretty bullish if we can run out those lows and then get a close back above. So this was a really good setup here on Micron to where you run out this low here, you know, you get everybody bearish. Oh, it's a breakdown on Micron here, just short this thing's going to 0. And then as soon as you get a weekly close back above this first swing low here over at like 363.59, then you can look to enter. Okay, so if we just go back onto the weekly chart here, then it was just a super good setup on Micron. The 3 drive is easier to see on the daily chart, right? So I've got the daily chart here. It's a lot easier to see this 3 drive, but then generally taking your entries like on a weekly level is going to just be like more confidence, and you're going to get a better hit rate on trades on the higher time frames than as opposed to taking it on like a daily level. So we can see here that on this weekly candle, you know, we closed above this low here, and then this could have been your entry on Micron. Okay, you get everybody trapped here. Everybody's bearish on this breakdown on the daily level, but as soon as you get a close back above, then this was probably one of the best trades like of the year in the market. You could have sized into it pretty nicely here, and it was like a 15R trade up to the high, 233% move. So that would be a potential setup that I'd be looking for here on Micron, to where, okay, we have this first low right here. Okay, so that would be similar to like this low right down here. Let me just bring this a little bit closer here so it's easier to see. Okay, so this low would be like this low right here. This low right here would be like this one right here. Okay, and now if we run this again here at 803, come back down, run this again, and then if we get a close back above 855, then that would be one trade setup I'd be interested in taking on Micron. Okay, so we could take a look here. If we get a close back, sweep of the low, close back above, let's say you have to enter at like 876, and then if price came all the way down here, this would, I actually didn't even notice this, but this would be an even higher confidence setup, because if we did run out this low, we'd be filling the gap here on the daily as well. So this would be a gap fill on the daily down to like 781 here. We'd run this low as well, and then if you got to close back above, your stop would go like around the low here. Let's just say like the wick low takes us down to 778. You would enter here on the reclaim, and then you'd be targeting a move back to the highs. So that would be about like a 4R setup there on Micron. So that's kind of the one setup that I'm looking at here. because on the higher time frames, I definitely do think that it still has, potential to move down quite a bit. Like on the monthly, we could pull back to 475. So on the lower time frames, there is a potential setup, but if we don't see, this setup confirm on the lower time frames, then you could be looking at a deeper pullback here on Micron. The next chart I want to look at here is Dell. So Dell on the weekly level is one of the most bullish AI charts that we have right now, because, well, a lot of the other names have been pulling back over the past couple of weeks and have put in like 30 to 50% drawdowns. Dell has literally gone sideways. From its high, it's only down 6%. So it's down the least out of most AI related stocks right now. And we can see here we have a swing high at 469.37 and a swing low at 356.97. So you can play this in two different ways here. You can either play the breakout of 469, or you could play a deviation below 356 here if we were to get that. So if we did get a breakout above the high here, then how you could play this is, let's just say we close like on a weekly level at 504 here. We get a weekly close above 469. Then your invalidation would be a close on the weekly back below this high at 469. So you don't really ever know if you do like get a deviation like this and you close back below, you never know how far it's going to pull back. So you do have to manage your risk accordingly. But if it were to get a very bearish like wick up and then a close back below on the weekly, you could be looking at like a 20% stop, so it could be a pretty wide stop on something like this. But you'd be targeting like about probably at least a 50% move to new highs here on Dell. If we take a look at how far it ran when it broke out of this little consolidation, it ended up moving like 80%. So if we're conservative and just say that it runs like 40% or something like that, then you could get a move up to like 660 here. So it definitely doesn't provide the best RR on these breakout kind of plays, because you do have to kind of be more careful with your stop, and you just don't know where it's going to close back below on a weekly level if it does like wick above and close below. So these kind of breakouts don't provide as good of risk to rewards as the ones where you like deviate a low on a weekly and then get a close back above. Those usually provide better risk to reward setups. So the most ideal play on Dell here would be is if we came down and we wicked below this like 356 level. If we came down, wick below, got a close back above, let's just say we wick down to like 340, then you'd be looking at like only, a 10% stop, and you'd be targeting back to the high here as your first take profit level. And then if we got a move, back up to 600 or up to 600, it would be, about a 6-hour trade there. So a couple different ways that you can look to play Dell, and it is showing the best relative strength for any chart. So if we do get a weekly breakout here, then it would be one that I'd definitely be interested in playing. So the next AI related stock that we're taking a look at here is PENG, or PENG, and this one is pretty bearish right now, but it has the potential to be setting up for something bullish if we can confirm a couple of conditions. So what we've seen here on PENG over the past week is we actually broke down on the daily. So on this daily candle here of July 20th, we ended up breaking market structure. So we broke below this low here at 60.31. Okay, we got the close below, and now on this week here, we've rallied back up into this low, never got a close back above, had a pretty bearish daily close here on the Friday. So this thing could just continue to roll over from here. Like, this is a bearish chart right now, but what could make it bullish is if we got a close back above 61.59. Okay, this is the level I'm watching here on PENG, because if we get a close above 61.59, then anybody who's looking to short this breakdown is now off sides, and they've got to start considering to cover their position. So what I'd be looking to do here is, let's say we get a close back above here on the weekly at like 65. Okay, and then you put your stop at the low here. So it'd be like a 20% stop, and you'd be targeting up to new highs here on PENG. So it's not the best risk to reward for a move back to the high, but you'd be expecting like a breakout move up to new highs here on PENG, which would make the risk to reward a lot better. So yeah, these kind of failed breakdown setups are ones I really like to play because the risk to reward is very clear on them, and you have a lot of people just shorting this right here. So many people are seeing this as a breakdown. Okay, we break down on the daily here, rally back in, lots of shorts piling in here on this breakdown. So if we get a weekly close back above here, then the shorts are going to have to start covering, and we could get just a move all the way back up to the range high. Like, that's your first target always on these kind of deviation type moves, is you'd be expecting a move at least up to like 73.62. And the only way I wouldn't play PENG here is if we got a close like that on the weekly that closed back above like at 72.6 or something. If we got just a super bullish weekly close, then that just wouldn't provide you the best risk to reward, because you would enter up there, right? And your stop would have to go like below the low. So it'd be like a 30% stop, and then you'd be targeting like the high. It's just a really crappy risk to reward. So it does definitely depend on where PENG would close the weekly out, because if we close like anywhere below like 65, in between like 65 and 61.59, I think it's worth playing. But closing up at like above 70, I just don't think it's it would provide a very good risk to reward setup for you. You could even be a little bit more aggressive with PENG here, to where like this is the swing low, right? So on the weekly, we did close below the swing low here. But if we were to get a close back above this swing low on a weekly level, then that could help you with a little bit better of a risk to reward. And it would be kind of similar to what we saw on Micron, to where Micron like had this low here, okay, had another low. We got a close below here on the daily. And then as soon as we got a daily close back above the low, it confirmed that the bottom was in. So back to PENG here. We have this low, like we have another low right here. Okay, so if we just got a close back above this low at 56.64, then that would be like a good sign, a good starting point. But I do think that because we've made this like little swing high right here, if you want to be like even more confident in the trade, then waiting for a close back above 61.59 is going to be just going to provide more confidence that the trade is going to work out, as opposed to just entering based off of closing back above 56.75. So next up here, let's take a look at Sandisk, or SNDK, and this one on the monthly level really doesn't have a level until all the way down to 776. So when you're playing these names like Sandisk and Micron that have just run so much, and they're just super volatile names, and they can see pretty big percent moves, you got to dip down onto the lower time frames to really get any decent trade ideas. Because if the market does like actually flip pretty bearish here, then we could definitely see Sandisk down at 776. And what would kind of confirm that for me is if we're closing below 1,278, then watch out below, or watch out for a deviation at this level. Okay, so there's a couple different ways that Sandisk could play out here. 1278 is the level that I want to see ran here. And if we do end up running that level, it could provide us with a nice little reclaim setup here. So I got a level here marked out at 1,326. So if we were to come back down here, take out this low at like 1,277, and then get a weekly close back above 1,326, then that could be a setup here on Sandisk that you could look to take based off of like a daily or a weekly chart. Because if we don't end up getting like if we close a weekly below this level right here at like 1,277, then I would just not be touching, I wouldn't be touching this thing unless we did, you know, confirm a reclaim. So it's all about these failed breakdown setups now on these names here, because if they do not confirm failed breakdowns, then you definitely should be more patient on them and wait for lower prices. Because if we don't confirm a failed breakdown, if we run the low here, this thing's going back to like 776. Okay, so there's literally no support here all the way down to this 776 level, to where we had this consolidation previously. So you've just got to play failed breakdowns basically at this point if you're looking for setups on a lot of these AI plays. So if we did get a failed breakdown here, what you would want to see is you could look to enter on a weekly close. Like if we ran this low here, got a weekly close back above this low right here. The weekly closes around here, and then your stop would go below the wick low down there. And you would look to target a move like back to the highs. And ideally this would coincide with like a trend line breakout here as well. We kind of have this trend that we've been following here on Sandisk. So something that could look pretty nice is if we kind of chop sideways here a little bit for the next couple of weeks, and then in like August, if we came back down, ran the low here, and then we got a close on the weekly above the trend line and back above this low, then that could provide you with a nice nice setup on Sandisk to where you have a tighter stop. So this would be like, you know, 10 to 20% stop depending on how low the wick goes. Like I guess we could, you know, potentially wick all the way down to like 1,113 like on the daily. That is a gap there that we could wick into. There's also a gap like right here between like 1,208 and 1,189. So personally, I'm just not really interested in blind bidding these kind of AI names because they have ran so much. But on these kind of reclaim setups is where I would definitely be more interested. All right, and then the final stock we're going to take a look at in this video is going to be Intel or INTC. So Intel on the previous weekly candle here, or in these past 2 weekly candles, they're definitely looking quite bearish, but everything can be erased if we just get a weekly close back above 98.2. So below 98.2, we're bearish. I wouldn't touch this thing right now because there is quite a long way down. If we just zoom out here, you know, the previous all-time high, let's just mark that out here on the chart. The previous all-time high is at about like 70, 75 here. So if we don't quickly confirm a reclaim of 98.2, we're probably heading down to 75.75 to retest the previous all-time high. So this is a potential failed breakdown setup, but until we get some sort of confirmation, I'm not looking to enter Intel here. A move down into this level would kind of make sense as well, like if this is actually a breakdown, because we do have this massive gap here on the daily. We have a gap here from like 79 all the way down to 68. This was like the break of the previous all-time high. So it wouldn't surprise me if we did move down into 75 around there. But the setup that you'd be looking to play on Intel, if we do get a weekly close back above 98.2, let's just say we close at like 101, then your stop would go below the low there. And then you'd be looking to target a move back up to the range high. So this would be like a 2.69R trade here, about a 30% move. And ideally, you'd be looking for a move back up to like all-time highs and beyond, because usually when these failed breakdowns do happen like this, you almost always get a move to the other side. We actually saw this like here on Intel to where we failed to break out, and then where did we go? All the way back down to the range low here. So just looking at the daily chart here to get a better picture, we had a swing high right here and we just chopped above, okay? But like on the weekly level, we closed above here, we faked everyone out, and when we got the close back below, that confirmed that, okay, it's probably, you know, you probably want to be out of Intel here. If you took this like breakout play on Intel on this close here, then it actually provided you with a very tight stop. So you only would have lost like 4.5% here. So it's not a bad trade at all to try to take a little breakout there in Intel, but didn't work. So where are we expecting price to go after a failed breakout? All the way back down to the low, which is where we visited now. But if we do this on the opposite side now, to where we reclaim 98.2, we get a weekly close back above the level, then you'd be looking for a move all the way back to the highs. All right, so that is going to be all for this video. Those are 10 AI related stocks and their charts and some potential setups that we could be looking at here in the next couple of weeks or months. So thank you guys so much for watching. Definitely subscribe if you'd like to see more content like this in the future, and I will see you guys in the next video.